Assets are the economic resources that businesses use in their operations, and in the case of bankruptcy, can be used to repay their outstanding debt. Some assets can be converted into cash to repay debts more easily than others, while certain intangible assets like goodwill can't be converted into cash at all. Net tangible assets are calculated in order to provide a rough assessment of the business's value based on the value as recorded on the accounts of its tangible assets. Let's get into a bit more detail. Net tangible assets, or NTA, represent a company's total amount of physical assets minus any liabilities. The calculation of net tangible assets takes the fair value of the company's tangible assets and subtracts the fair market value of its liabilities. Tangible assets can include items such as cash, inventory, accounts receivable, and property, plant, and equipment. Total assets include tangible and intangible assets and can be found on the company's balance sheet. Intangible assets are those that lack physical form, like goodwill, trademarks, and copyrights. Total liabilities include current and non current liabilities and can also be found on the company's balance sheet. NTA per share is an indication of what each share in the company is worth if all the assets were liquidated, all the debts were paid, and the residual was distributed to the ordinary shareholders on a per share basis. Net tangible assets can be a very useful metric for evaluating a company's future profitability, especially in capital intensive industries. Here you can see the formula for working out NTA. Total assets are the sum total of asset side of the balance sheet. It includes all current assets, long-term tangible assets, as well as intangible assets and goodwill. Next is intangible assets. These assets are those which we can't touch or feel, for example, goodwill, trademarks, copyrights, or patents. Note that most balance sheets will report goodwill separately from intangible assets. Lastly, you've got total liabilities. These include current liabilities, long-term debt, and other long-term liabilities. NTA is considered very useful in the analysis of a company's assets, but the level of relevance might be different depending on the industry you're dealing with. The relevance of NTA is dependent on how important intangible assets are for the specific industry, since they're taken away while calculating this measure. In the case of oil and gas companies or a car manufacturer, NTAs are very high. They can secure debt financing relatively easily by pledging their tangible assets. In technology companies, intangible assets are pretty large. This results in a lower amount of NTA. Some companies use the net tangible assets per share value instead of the net tangible assets measurement. To calculate a company's net tangible assets per share of common stock, divide its net tangible assets, which is the equation we just talked about, figure by the number of outstanding common shares. For example, if a company has net tangible assets of $1 million and 500,000 shares outstanding, its net tangible asset value per share is $2. This value is useful when conducting a comparative analysis of companies within an industry. Auto manufacturers, for example, may have high net tangible assets per share, while a software company with a large level of intangible assets may have a much lower number per share. It's therefore pretty important to use this measure only when analyzing companies within the same industry. NTA per share is used in place of NTA for a useful comparison of companies operating within a specific industry. This is because different industries tend to have widely varying ratios of tangible assets and intangible assets, and hence the relevance of the measure differs. Net tangible assets per share are calculated by dividing NTA figure by the total number of shares outstanding for a company, and it looks like this. This measure of a company's tangible assets is important because it allows the company's management team to analyze its asset position without including obsolete or difficult to value intangible assets. A company's return on assets, or ROA, for example, is often more accurate when net tangible assets are used in the calculation. The usefulness of deriving net tangible assets, however, varies across industries, as we talked about. Medical device manufacturers will have a higher level of intangible assets. This means it's important to look at the company's price to book PB value and compare it against similar companies to gauge performance as well.